of the IIS, and together with the people of the IIS Secretariat and the chair of our Macroprudential Monitoring Working Group, Daniel Wyant, I will guide you through today's public session. I see that attendees are still arriving, but as we are after 1 o'clock Central European time, I would suggest we gently start today's session. So for today's session, and maybe we can skip Nicola to the next slide, we have two topics for you which we would like to cover. First one is on the public consultation on the review of the IIM assessment methodology. So we've had, given the adoption of the holistic framework in 2019, a first 3-year cycle of this assessment methodology. We're going into the next 3-year cycle, and we are considering some changes. And today we would like to present to you the content of those changes, high level, and you will get the opportunity to react and to give your comments during the public consultation, which was already initiated. Second topic of today will be on our liquidity metrics. So following a series of public consultation which we've had in the recent past, we at IIS finalized our liquidity metrics in November last year. So we'd like to present to you the current state of affairs. Where did we end up? And what's our plan in terms of development in the field of liquidity metrics going forward? So we'd like to cover these two topics. We have 2 hours in total. Let's see if we need a full 2 hours. In any case, what I will try to do is to make sure that we dedicate more or less maximum 1 hour to each of these two topics. So to make sure that we have an equal distribution in terms of timing for the two topics to cover. So I'll stop here and I'll give the floor to Daniel Wyant, the chair of our MMWG, our working group on macroprudential monitoring, and he will guide you through the high-level principles and details of the public consultation on the review of the IIM methodology. So please, Daniel.
Thank you very much, Dieter. The first big topic on our agenda is the ongoing public consultation on the individual insurer monitoring methodology. The IIM methodology is the IIS main tool to identify the macroprudential concerns stemming from individual insurers. As part of the 3-year review cycle, the IIS is seeking stakeholder input on any potential change in that methodology. Especially, we seek input on the following topics: a potential enhanced monitoring of level 3 assets, a way to gather more information on cross-border reinsurance, ideas how to refine the derivatives and the short-term funding indicators. And we would also welcome feedback on the removal of the financial guarantees indicator, any other indicators, and the IIM template in general. The removal of the planned removal of the financial guarantees indicator requires us to also review the weighting of the indicators for the methodology. In addition, we seek your feedback on some more process-oriented topics. On the one hand, we would welcome feedback on the criteria to determine the inclusion in the insurer pool, so from which insurers IIM information will be requested. On the other hand, we seek your input on, or your feedback on the IIS reporting, both to the participating insurers and to the public. This happens via the participating insurer reports and the yearly publication of the GMA, the last of which happened on December 15 last year. So to the next slide, please. Yeah. Just some general background information on what the public consultation is about. So the holistic framework for the assessment and mitigation of systemic risk consists of 2 major parts. First, there are enhanced macroprudential supervision policy measures. And the second part is the ongoing yearly monitoring happening through the global monitoring exercise. The global monitoring exercise itself also consists of two major parts. One is the sector-wide monitoring. The other one is the individual insurer monitoring, which uses the assessment methodology as one of its inputs. And the public consultation is on that assessment methodology and the 3-year cycle. The objective of the public consultation is to seek stakeholder input on the methodology that would then be applied for the coming 3-year cycle. The deadline for that input via the consultation tool is February 6 this year. It's unfortunately not possible to extend that deadline beyond February 6 because we have a very tight timeline until the launch of the 2023 IIM data collection that is planned for March. Next slide, please. Yeah. Currently, the methodology consists of 5 systemic risk categories, and that combines 14 indicators. There are no changes planned on the level of the 5 risk categories, but changes planned on the level of the indicators. For more detailed information on the indicators and the formula behind them, I refer to the GMA 2022 and its annexes. With this, I hand over to Nicolas Colpert from the IIS Secretariat to lead us through the questions that the IIS asks in the public consultation. Thanks.
Thank you very much, Daniel. And I will start with the first indicator of the IIM assessment methodology, where we seek stakeholder input, and that is around the level 3 assets indicator. So here we are considering to refine the underlying data rows or the technical specifications for the level 3 assets indicator in order to firstly better capture the most material types of level 3 assets that exist. Secondly, to ensure that level 3 financial assets are reported consistently across different insurance groups, irrespective of the differences in accounting standards. And third, to identify any other types of illiquid or difficult to value assets using non-fair value methods, so that are not captured under the level 3 assets reporting. And so the questions that you will see in the public consultation document are always in the blue boxes here on the slides, and those are exactly to capture these 3 elements. The second indicator where we seek inputs is around enhancing the monitoring of reinsurance or cross-border reinsurance. So in our current methodology, which is the 2019 IIM assessment methodology, reinsurance exposures are captured under the intra-financial assets and intra-financial liabilities indicators. And here we are considering to refine the underlying data rows or tech specs again for this indicator, mainly in order to better capture, first of all, the cross-border reinsurance exposures, both ceded and assumed. And secondly, the concentration risk of cross-border reinsurance in certain insurers or jurisdictions. Here also, in addition, we are considering developing a reinsurance auxiliary indicator, similar structure, so to say, as the auxiliary indicator that you have for liquidity metrics that we will come back to in the second part of this presentation. Then third, we are also seeking to refine potentially the derivatives indicator. We are not considering at this stage to make substantial changes in the indicator. However, we would increase potentially the granularity of the data rows of this indicator to enhance the monitoring, mainly to better capture the different types of exposures underlying the derivatives indicator, but also to potentially better assess the outward risk. That is the risk that the derivatives holdings of insurers pose to the broader financial system and the real economy. Also here, the development of an auxiliary indicator will be considered. Then we are also seeking to refine the short-term funding indicator. Here again, no substantial change in the sense that all of these indicators have proven to work quite well over the past 3 years. However, we do want to seek your input on how to better capture different types of exposures underlying the short-term funding indicator, for instance, with respect to repos, in order to refine the monitoring for financial stability purposes and to assess the potential outward risk again. Then, in addition to indicators that we are seeking to enhance or refine, as Daniel has already alluded to, we are also considering removing indicators, and in particular, the financial guarantees indicator, which is mainly due to the changes in business models and also changes in certain insurers' activities, which have resulted in the fact that this financial guarantees indicator has become quite immaterial over these past 5 years. And so we are considering to remove the indicator, but would also seek any feedback you may have on this. Importantly, I will also add that we would continue monitoring the financial guarantees just to make sure that we can keep an eye on the materiality of this going forward. Then also we have some questions in a public consultation document on any of the other indicators. So currently we are not making or seeking to make changes on all of the other indicators. So with respect to total assets, total revenues, revenues outside of the home country, number of countries, derivatives trading, minimum guarantees on variable products, liability, liquidity, and premiums for specific business lines. So these are all of the other indicators where at this stage we are not considering of making changes, but if you would have any other feedback on these, we would very much appreciate that as well. There's also a question around the granularity of the data templates. That is, of course, something that we are keeping a close eye on to strike the right balance between the granularity that we need for financial stability monitoring purposes on the one hand, versus on the other hand, the data burden that requires for the insurance groups to report it, but also for our membership to validate and analyze the data and to report it back to the stakeholders. As Daniel has said, when you remove indicators, for instance, the financial guarantees indicator, we need to do a reweighting to make sure that the weights of all of these indicators add up to 100% again. And so the proposed reweighting you can see in this table and in the public consultation document. If you have any feedback on this, we would also welcome it. With respect to the selection criteria that we use to determine the pool of insurers that participate in the individual insurer monitoring, we are also seeking any feedback you may have on this. Our current thinking is to keep these criteria and the design of these criteria rather stable, but we would consider updating some of the numbers you see here to account for inflation. And we may also add, for instance, in the future updated global monitoring exercise document, additional wording or paragraphs potentially on how supervisors could apply discretion to either remove or include on a supervisory discretion basis insurers to participate in the IIM. Then a final element of this public consultation document relates to the reporting from the IIS to the participating insurers and to the public in the GMAR. So here, first of all, the reporting to the participating insurers, that is the so-called PIRs. So as outlined in the GME document, at the end of every GME exercise every year, we prepare insurer-specific reports for each of the insurers that participate in the IIM. That includes, for instance, the insurer score on each of the indicators, as well as distributions around it. In addition, over these past few years, we have also complemented that information with, for instance, key data rows around the assets composition, the liabilities, revenues, solvency, profitability, liquidity, etc. Any feedback you have on these participating insurer reports, for instance, on how we could improve these going forward, would be much appreciated. And then finally, similarly, our reports to the public, that's our Global Insurance Markets Report, or GMAR, which we publish every year. We will publish the slides, so you also have the links to these documents. But if you have feedback on how we could improve this GMAR report going forward, we would also very much welcome that. So with that, Dieter, I would perhaps hand back the floor to you to moderate the Q&A on this first section of the presentation.
Okay, thank you, Nicola, and thank you, Daniel, for providing this context. So you will have plenty of opportunity, of course, to give us your detailed comments, and as highlighted by Daniel, by a deadline of 6th of February. But we'll be happy to try to answer any questions you may have already at this stage. In particular, if you have questions also on how to interpret or how to understand some of the elements of the public consultation. So I'm happy to open the floor to see if any of the participants to this telco have any questions. So either you can, I guess, raise your virtual hand or try to give a sign via the chat function in WebEx if you would like me to give you the floor. So I'll pause here and please let us know if you have any questions at this stage.
I see, Dieter, we have one raised hand from you, Francis.
Yes, okay, you, please.
I'll be very brief.
Yeah.
I only get the Thanksgiving alerts like everybody else.
Yeah. Looks like Hugh is on another call, so we may have to come back to you, Francis.
Okay.
Anyone else who would like to have the floor? Or was everything super clear, which is, of course, very good if that was the case.
We do have two more raised hands, Dieter. So if fine with you, I will unmute these persons one by one.
Yes, please go ahead, Nicola.
Yeah, and so if you could briefly introduce yourself, that would be helpful. But the first person is Mr. T. Husted. You should be unmuted now.
I just have a question on the removal of the financial guarantees in the scoring. Maybe we are not so happy with it. We maybe just don't quite understand it, because I mean has been considered as a systemic risk, source of systemic risk, and now from my understanding, the removal means that other risks get a higher weight. So, but this could result in higher scorings for participants, although their risk profile did not change. My question is, how did you take this into account?
Well, there are two aspects, of course, here. First of all, maybe a bit of context, and of course, my colleagues can help me to complete my answer. The main reason why the financial guarantees indicator was removed because it turned out to be extremely immaterial, so not hardly influencing anymore the scores, which of course meant that we needed to think about whether it's still useful to add this data element. You're right, of course, in observing that by removing this indicator, one thing you need to consider is how this impacts the overall scoring. And in terms of weighting, of course, when removing one element, you have to re-weight the other elements in order to come to an overall 100% coverage of all the indicators. And what we propose currently is just to basically remove the financial guarantee indicator, and the reweighting is done more or less in in a linear way, if I can say it like that. But please, Nicola or Thomas or Daniel, if you want to complete, go ahead.
No, I think you're fully right, Dieter. Effectively, we have seen over these last 5 years that the financial guarantees indicator had become very immaterial, which is the key driver behind the removal. And that also means that if we reweight by close to linearly adjusting the other weights, the impact on the individual insurer scores on aggregate is quite limited. That said, we are of course mindful to the point that you have raised with respect to the source of systemic risk that this has posed in the past, which is why the current thinking would be to still keep on at least monitoring exposures with respect to financial guarantees, in the sense that if they would in any way become material again in the future, that we could at least know that this is happening and act accordingly if necessary.
Thanks, Nicola. So I don't know if that provides a sufficient answer to your question at this stage. Of course, feel free to still come on that during the public consultation, but at least I hope we've given you some extra context as to why this change is proposed.
Then next, Dieter, I see we have 2 more raised hands. Yeah. The first one is from Shadi Siadis. If you could please speak up, you should be unmuted now.
Removal of the financial guarantees indicator. I do feel that it's not the perfect way to do this, because you base your decision on volume and not on the risk behind the category. So I could ask you, what would you do in case that insurance tomorrow stop using derivatives? Would you set the weight at 0 and redistribute? It wouldn't make sense. I think you should value all systemic risk activities in your approach. Thank you.
Well, thanks, duly noted. I don't know, Nicola or Thomas, whether there's any extra context to provide in terms of whether we look only at volumes or other elements as well.
Just some context on this from my side. I do understand your concern that we miss something there, but we keep on monitoring this via the sector-wide monitoring, because we don't have any guarantee that such activity would be done by any of the insurers that are currently in the insurer pool. Could also be some other insurers in some other markets. And that would only be captured via the sector-wide monitoring. And if we encounter something there, rest assured that the IAS will reconsider how to better assess that situation.
So it is definitely monitored. It boils down to the question whether it's still something that should influence, yes or no, the overall risk score of those individual insurers that participate in the IIM methodology. But we've taken account of your comment. Feel free also to highlight it during the public consultation, and we will certainly duly consider it also going forward.
And then the next raised hand I see is from Bruce Barnes. Bruce, please go ahead.
This is Bruce Barnes with Berkshire Hathaway. I guess I would kind of request that you explain a little bit more why you think there's needs to be more enhanced monitoring around cross-border reinsurance, and what's the current deficiency in the minds of the IAS?
Well, that's a very good question. I mean, one thing we have, of course, observed, and this is the main driver behind our proposal here, is that cross-border reinsurance in the last few years increased in our sample, or the use of cross-border reinsurance. And the way in which we collect data today does not allow us to have a good understanding and enough granular view on what is happening. And the main thing we would like to avoid here is also to draw wrong conclusions, because we have a certain ID, but not an ID which is, in my view, granular enough to draw reliable conclusions in this respect. So that's why we do propose here some changes, some additions, which would help us also to interpret it better what's going on. But Nicola, Daniel, or Thomas, if you'd like to add something, please.
Not much to add, Peter. It's effectively, as you said, to be able to monitor the volumes. With respect to reinsurance, that of course transfers risks from one entity to another, or one jurisdiction to another. So we're keen to make sure that we have a good monitoring of these risk transfers in the GME going forward.
But I guess, is the GME the right place to do that? Because reinsurance market data is fairly publicly available. You know, there's routinely lists published by the major brokers, you know, showing where the players are in terms of volume. So I think the idea of where are concentrations and where are premium volumes seems like that should be well known already. And you know, focusing purely on cross-border, does that really give you the kind of answer you want? Are you when you're ignoring large domestic, you know, concentrations, for example, and then also this seems to ignore capital market activity that's done effectively as reinsurance, which has become a significant and growing part of the industry over the last few years. So it seems like it's placing more weight on one. It seems like it's highlighting one specific thing in a way that sort of potentially draws undue scrutiny that's, you know, out of proportion to what it needs.
No, I mean, at least that was definitely not our intention. What we did see is there is an increased use here, and what we do like to have is a better view, a better granular view on what is happening in terms of our IIM pool insurers. I don't know. I have to admit, I'm not sure whether public available data will give us this granular view in terms of the different individual players we have in our IIM pool. And on the other element, I think there are some elements that cover also transactions, risk transactions beyond reinsurance, but I think my colleagues can correct me or compliment me if I'm wrong here. Please.
Peter, so
Yeah.
maybe if I can add to this topic. So we did lots of analysis on reinsurance at the IIS in previous years. You know, you can also see the whole chapter related only to reinsurance in our GMAR. In GMAR 2022, you can see the detailed analysis on reinsurance. And that analysis is based on the data that we collect in the sectoral monitoring. And these sectoral monitoring data, they are a combination of data that are available to supervisors, and sometimes they are ad hoc data calls conducted in certain jurisdictions. But we also understood that we need a bit more granularity to collect this year, and to know something more about, not only about cross-border reinsurance. Cross-border is just one element of this enhancement of this change. So we don't want to just focus on this one single element. And why we highlighted this word cross-border. So one example of this, or one reason, could be also the fact that we didn't focus on the affiliated reinsurance in our analysis in previous years. So we focus on reinsurance that was done between two entities that are unrelated to each other. But the affiliated amounts, they are really quite interesting, and we spotted some interesting developments there. So when we only look at the data that are publicly available, we of course analyze them, and we usually research them, but they focus only on the entities themselves, and it's really hard for us to assess the amounts, for example, of this affiliated business. And in addition to your question, also in the past, you know that we had more data points on reinsurance in our data collections. As a part of the GSI data collections, we had 3 sheets related to only reinsurance, and this type of analysis was streamlined over time. But now I think it's time to do a bit more on the topic. So yeah, all these things were really carefully considered, and cross-border dimension is only one of the dimensions that we would like to that we would like to explore. And I also agree with Bruce that also the capital dimension, it's very important, and therefore we also analyze it every year, and it's a part of our reports. We focus on alternative capital instruments. That's how we call it. We also research all the inputs from other providers at the market, and yeah, so that's what I just wanted to add, Dieter.
No, thank you, Thomas. That's in line also with what I thought. I don't know if that gives you all the answers, Bruce, but I hope at least it gives you a little bit of context as to where these changes and proposals are coming from. I think, Nicolas, we can take a next question.
Yeah, the next question is from Nicolas Joly. Please go ahead.
Do you hear me?
Yes.
Okay, cool. Still on reinsurance, can you give me a bit more of an indication of what types of information that you want to collect as part of the IIM? And also you hinted at the possibility to develop a new ancillary indicator similar to the one on liquidity, and also give us maybe a bit more background about that and the timeline. As you said, as part of the sector-wide monitoring, there's already data being collected, and also as part of the qualitative template that you added to the quantitative one, you're also collecting information on the main geographies for life and health on one hand, and P&C on the other hand, of reinsurance business, and also the 5 main reinsurers or retrocessionaire for that matter. So what are you trying to capture in addition to that for the IIM, and again, what, as opposed to that, what you are trying to capture as part of the new ancillary indicator, and again, whether you want to have that already for this year collection, or whether it's more a multi-year project. Thank you.
Well, on what we're aiming to collect a bit more detail, I'll let the colleagues answer. On the development of the ancillary indicator, it's our intention to think about that. Now, you know that is something that takes some time to develop. If you look at the liquidity indicator, that has also taken some time to develop. So I don't want to overpromise being ready in a short term in this respect. But let's see where we end up. But at least I think we would need to collect some, at least the first few waves of data before moving to the setup of a reliable new ancillary indicator. I don't know if any of the 3 colleagues can give us some more details on what type of data we would like to collect here. Nicola or Daniel or Thomas, so, yes.
I can give a bit of background or some insights about this. And first of all, I would like to mention what Dieter said, that this is not for 1-year project. This is a multi-year project. You know what we did with liquidity metrics, that we analyzed the metrics, we calibrated them. So it can take some time to streamline and to prepare everything properly. So it's for more years. And in the first steps, we would like to focus on several things. I will mention a few of them. Of course, there is still some discussion and some calibrations done at the IIS, so it can, of course, change. But you know that currently we collect the table with top 5 reinsurance companies. That table is very, very insightful for us. We also collect a question 3 as a part of the qualitative component in our data collection, in our IIM data collection, which shows us the movements of premiums, you know, the amount of direct premiums in different regions, then assumed premiums that came from different regions, and then also ceded or retroceded premiums that go to certain regions. So this table was actually very, very insightful for us. And we would like to maybe add a bit more granularity to this table, and maybe to get not only the detail for regions, but maybe also for top 1 or top 2, 3 jurisdictions, in particularly for written, assumed, and ceded premiums. So this is something what can help us to understand how the premiums are moving between companies. What we also consider to add is also the dimension about the affiliated reinsurance. Currently, we strongly focus, or we focus primarily on the non-affiliated type of reinsurance business. So we also consider this type of dimension Then also in the current analysis that we conduct at the IIS, we focus more on premiums when we are talking about reinsurance, but also there is a dimension related to provisions. So also we would like to consider maybe more provisions in this analysis of reinsurance, not only purely focus on premiums. So this is one example of things. Then also what is currently maybe also what we also consider, maybe not for this year, maybe in following years, also to get a bit more insights on contracts, and not on all the contracts, but on the biggest contracts. So most probably there can be also considered some type of threshold, and we would like to maybe focus on the biggest reinsurance contracts that occur. So this is also one thing, and yeah, so those things are just the main examples. And then of course the table with top 5 reinsurance companies, that table is very precious for us, and we very appreciate everything what you delivered already up to now to the IIS with regards to reinsurance. Yeah, so that's maybe a bit of insights about what things that we consider for reinsurance, but of course more needs to be done, and it's a multi-year project, so it can also develop over time. And maybe one last thing to add, Dieter, reinsurance as an ancillary indicator is not a new thing for the IIS. We also included it in the current version of the GME document, where we had some thoughts about some enhancements of the reinsurance analysis. As you know, in the past, reinsurance was a separate indicator in the IIM methodology. Then it was divided, and it's now monitored under intra-financial assets and intra-financial liabilities. But there was always some space reserved for further analysis on reinsurance. And maybe my last point, sorry for so much talking, but we very carefully consider the reporting burden that can be created for companies. So all these discussions and preparations done by the IIS and by IIS members, they strongly consider that we don't want to create a huge burden for companies in the data collections. We want to really collect the most important things and to streamline as much as possible the whole potential data collection. Floor back to you, Dieter.
No, thank you, Thomas. I think you summarized it very well. I think, again, the start was the observation that there is a growing use of reinsurance. The conclusion for us was that we need to monitor this a bit more in detail, which triggers two things. A thought about which type of data we would like to have. Do we have enough granularity today? Our feeling is maybe not. So then, as Thomas said, the key is to find the balance between not creating too much burden on your side on the one hand, and on the other hand, still have the ability to have an informative monitoring of the different reinsurance flows on the other hand. And coupled with that, the idea of how best to follow up this monitoring through the use of certain ancillary indicators. So that's also work that we want to cover going ahead, and for which we need a bit more granular data in this respect. Now, as said before, feel free to highlight also your comments and thoughts on this during the public consultation. I hope at least that this provided you with a bit of extra background in this respect. Do we have any more questions here on the IIM assessment methodology?
I cannot see any further raised hands, Dieter.
Okay, let's try then to move to the second topic. Now, if anyone would have still a question later on this, we'll have another Q&A session after the second topic, and if need be, we can still come back, of course, to the IIM methodology if one or the other question pops up in your mind. So on the second part of the presentation of today, I see we have a hand up. Maybe we'll take that, Nicola, before I move on to this next topic.
Yeah, sure, Mr. Alvaro Reiner, please go ahead.
Seems that something is not working in terms of sound. So just to check, we can't hear you at this stage, Mr. Reiner. Okay, Nicola, I do suggest we do move on. I feel free to try again later on. Hopefully the sound works better then. We'll try again and unmute you again at a later stage if needed, and let's hope that the sound carries through at that point in time. Okay, on the second topic of today, we've talked a little bit about ancillary indicators in our last topic. One ancillary indicator which we finalized in November last year was the one on liquidity metrics, and that resulted in a publication. So what we would like to do today is to give you a little bit an overview of where we finally ended up in this respect and what's our planning going forward for the next 3 years in terms of liquidity metrics, so that you are aware of what IS is doing in this field. So I'll stop here and I'll give the floor again to Daniel, who will kick off this presentation. Please, Daniel.
Thank you, Dieter. Yeah, we can step right into the next slide. The document that was published last year was at the end of a multi-year project for which we received valuable input via 2 public consultations, but also equally valuable data via the IIM data collection, comments and replies to qualitative questions also in that data collection. So all those combined were included into the development of the liquidity metrics that were published last November 18. I want to take this opportunity and thank all of you who participated in that project and who supplied information over the last couple of years for that project. Thanks. The liquidity metrics is an important part of the IIS overall approach to the assessment and mitigation of liquidity risks in the insurance sector. And we really think that taking this closer look from a macroprudential perspective is valuable. In addition to the document that was provided on the liquidity metrics itself, we also provided last year a resolution of comments. So a resolution of comments received for the second public consultation. Next slide. The liquidity metrics will serve as a tool to help us monitor the global insurance sector's liquidity risk and to assess liquidity exposures from a macroprudential perspective. That may be critical as insurers have been exposed to liquidity shortfalls in previous crises. It is important to monitor liquidity risk not only in the banking sector, which was visible with the events in the UK last year, which didn't affect the insurance sector, but it's clearly visible that liquidity is an issue that needs to be monitored in more than only one sector. The new ancillary indicator will provide an additional perspective within the GME, but it is not intended to replace any current indicator of the IIM methodology in 2023 to 2025. Neither is it meant to be a regulatory requirement for individual insurers. The liquidity metrics are not part of the current public consultation because we have already had 2 public consultations on that. But as Thomas Stasny will provide you with present in the next couple of minutes, some work still needs to be done with respect to the liquidity metrics, and we take this opportunity to ask you for further input or any further remarks regarding this further work that we intend to do in the next year. With this, I hand over to Thomas Stasny from the IIS Secretariat to lead us through the liquidity metrics presentation. Thanks.
Thank you, Daniel, for the introduction to this topic. I would like to continue in the presentation with the slide number 20. So the planned usage of this ancillary indicator is described there, and you can see that the indicator is now fully integrated in the GME process. It's planned to be a part of the annual assessment of the systemic risk. Moreover, it's included in the feedback loop process in the annual collective discussion. So you can see clearly that we count with all the data that you provide to the liquidity metrics, either to the exposure approach or to the company projection approach. You can see that we are planning to use them during the whole year. In addition to this assessment of systemic risk and the usage of liquidity metrics data and of this ancillary indicator, we are also planning to include this ancillary indicator into our disclosure documents. So those documents were described by Nicola a while ago. So we would like to include the results also to the participating insurer reports every year. So you can also benefit from a data that were provided by you and by the other companies. You can see how your peers are developing in terms of liquidity. Of course, everything it's aggregated, and we hope that it can at least bring you a bit of added value, and also it can maybe create some type of feedback loop in your reporting, that when you can see some type of outliers, you can also focus on them in your reporting preparation, preparation of data for next year. And also we are planning to include the liquidity metrics results into the GMAR every year. So that's a planned usage of this ancillary indicator. In the slide number 21, you can see a list of liquidity metrics that are planned to be monitored in following 3 years. And so as you can see from this slide, there is no one single ratio, no one single metric that I would like to highlight. Instead of that, we have a set of liquidity metrics, considering that liquidity is a complex topic, and these different metrics and different time horizons, they all can help us to make more informed decision about the liquidity developments. They all bring something else to the analysis of systemic risk, and therefore we highly value all data that you provide to them. So please try to provide, if you are a company, if you are participating insurer, please try to provide data to exposure approach metrics and also to the company projection approach metrics, and because both of them, they can nicely complement each other. So in terms of the metrics themselves, so we have two approaches that are included in our ancillary indicator. The first approach is the exposure approach, where we have two metrics, two liquidity metrics. The main one is the 1-year time horizon ILR, which is insurance liquidity ratio, and then the second one is the supplementary ILR, which is 3-month time horizon ILR. So these two liquidity metrics are planned to be monitored under exposure approach of this ancillary indicator. Then we have company projection approach, and under company projection approach, we have three subgroups of metrics that are monitored or that will be monitored. The first group is baseline projections. Here we have 3 time horizons. We have 1-year time horizon, 3-month time horizon, and 1-month time horizon. Baseline projections are just projections without application of any liquidity distress. So that's your projections as you predict your developments of liquidity. I think the closest equivalent to them would be the ratios that you provide. That you provide also as a part of the IIM data collection as the current liquidity ratios. So yeah, without any applied stress. Then the second subgroup of the company projection approach liquidity metrics are stress projections, again with the same 3 time horizons. For these stress projections, you need to apply a liquidity stress test that will be prescribed every year to you as a part of the technical specifications of the IIM data collection. And these liquidity stress tests will be also refined over time. So this is also something what was described in the level 2 document that you can also find on the IIS website. And the last group or last type of the metrics that is implicitly in the IIM data collection, it's historical cash flows that are for 1-year time horizon. So that's the section 2.11 in the IIM template, and those are the historical cash flows that just occurred in your companies or that occurred in insurance companies. These type of data points were collected also partially in the past, and nowadays or in the future we would like to use them for data validation of data or of the projections that you provide, especially for baseline projections. So I think this is important to mention, that this is something like a just common sense check of things that are provided for baseline projections. So that was a list of liquidity metrics which form the whole ancillary indicator. Then we are not going to explain or to describe all the details about both approaches and about all the metrics that we have in the ancillary indicator, but we just prepare one example with one chart with results of one single metric, and that's the 1 year time horizon ILR, which is a part of the exposure approach. So in the exposure approach, we apply different factors to balance sheet and off balance sheet elements, and then these factors help us to derive the ratio. You can see the results in the chart. You can see how they develop over time. You can see also differences between business models. Here, I would like to again thank once again to all companies that provided data to the calibration of the ILR, because for the ILR, especially for the 1 year ILR, we conducted the calibration in last 5 or 6 years using the historical GSI data, now the GME data. So many thanks for all the data. Also big thanks for all the feedback that you provided in 2 public consultations. And as you can see also from our resolution of comments, we try to reflect as much as possible from your comments. And that's also reflected in the bigger focus on different business types that were considered and how we consider them in our ILR. So that's one example of the metric with the results. Then in the slide number 23, you can see areas for the further work. So as Daniel said, we concluded the work on the liquidity metrics as an ancillary indicator last year. We published the document, and this is particularly the case for the 1 year time horizon ILR, which is a part of the exposure approach, where we had lots of time to do some calibration. But for other areas of these liquidity metrics, especially for example for the 3-month time horizon under the exposure approach, and then especially for the company projection approach, we also acknowledge that more work needs to be done, and we will continue in the refinements of these metrics also in following years. So of course we will be monitoring the results that we will be collecting, but for example for 3-month time horizon, there is some space to refine factors, for example, or to work on the design of this particular metric. And the for company projection approach, this is especially related to the description of the liquidity stress test. So liquidity stress test is a category itself, and you will get more details about the liquidity stress test in the technical specifications of the IIM 2023 in mid-March. But we again try to include all the comments that we and all the feedback that we collected from you in the public consultations, also feedback collected from the IIS members, and also we want to consider the availability of data, because for construction of such a liquidity stress test, lots of data needs to be collected and needs to be available, and these data points are sometimes just not available. So therefore we are doing our best to prepare a very reasonable liquidity stress test that will be not creating huge burden for you, but we will be adding a lot of added value for the monitoring of liquidity risk. But this is something what will be refined over time. In the beginning of the process, with regards to the liquidity stress test, you will be able also to provide your own stressed projections, and then you will be asked also to provide the setting of your projections and of your liquidity stresses. But this is a backup solution in a situation when you cannot apply our liquidity stress test, because for some of you it's possible to apply the prescribed stress, for some of you it's maybe not possible. So then this is like a backup option. I think the worst option is to provide nothing and to give us completely no input, because then it's very hard to improve over time. And so your feedback and your data and all the comments will be very appreciated in following 3 years. And the last area for focus for the IIS with regards to liquidity in following key years, or especially in this current year, it's the area related to margin calls and derivatives, and then also to sovereign bond market liquidity. So that's also of course, related to events that happened in autumn 2022. We would like to get a bit more insights with regards especially to margin calls and to their stress amounts during 1 year, but I think we are still working on the good design of these potential data elements for the IIM 2023 data collection. So that's a bit of insights about the liquidity metrics. I think the purpose of this presentation was just to announce the publication of these two important documents, not only of the level 2 document concluding the project, but also the resolution of comments from the second public consultation. So that's the main purpose of these particular presentation. But in addition to that, there is also space for your other comments. So Dieter, floor back to you.
Thank you, Thomas. Thank you, Daniel, as well. So I hope this provided you a little bit with an overview of how we intend to use the liquidity metrics going forward, and also what we still intend to do, recognizing that it's never perfect and that our work in this respect is not yet finished. So I'm opening the floor to see if you have any questions with regard to the liquidity metrics work and project as we have just presented it, or if there are still any questions referring back to our first item of today, of course.
I can see one raised hand, Dieter.
Yes.
From Angus Scorgi. Please go ahead.
Hi there. Thanks for the floor and thanks for the introduction. It's Angus Scorgi here from Insurance Europe. I have to say we were a little bit disappointed when we read the report because you'd chosen to pursue sort of 5 separate liquidity metrics, and certainly our view that it was more than reasonable just to have a single simple liquidity metric which could be used to monitor the macroprudential liquidity risks. And when I look at your slide on slide 22, I think that sort of backs up our position where we see very stable liquidity across the period, especially during the COVID, etc. So I mean, I'm just sort of questioning whether further work is necessary in this regard. I mean, it sounds like you've planned quite a few more activities, but we certainly think that what's been done so far is sufficient, and perhaps more work is not really necessary. So I just want to share that thought with you. Thanks.
No, thank you for that comment. I mean, an element of our future work is effectively also to determine how many indicators we would need to comprehensively monitor the liquidity risk. I think, given the nature, of course, of insurance business, it may be a bit too simple to just have one indicator. For instance, the 1-year exposure approach, liquidity ratio only, I think would not provide us with sufficient comprehensive view and understanding of the real liquidity position of insurers. And in that respect, we also need to absolutely avoid that we would draw any wrong conclusions. Now, do we need the whole set of 5 indicators as presented going forward, etc., etc.? That is something which we will cover in our future work. And your data and calibrations that we will be able to do based on that will be crucial in that respect. I don't know, Thomas, would you like to add something to that?
I think you summarized it very well, Dieter. So I think we would like to monitor these metrics in following 3 years, and then maybe there will be another decision, also dependent on the data that we collect in following 3 years, and also the developments of liquidity itself in the market. Also, yeah, to have just one ratio, it could be maybe very simplified. But also we needed to consider the feedback that we collected in public consultations, and the feedback was quite diverse. Some stakeholders supported one area of metrics, others supported the second, and the last group supported maybe a combination of both because they acknowledged that they have some added value. So I think this is the plan for following 3 years, and yeah, and then we can always revisit it, and we can see how to improve it in the future. Back to Dieter.
Our future data collection and monitoring in this respect will be crucial to help us make this decision. What type of indicators we will still need going forward in order to get that comprehensive overview. It will probably be more than one. Let us also hope, on the other hand, that it may not need to be the full set as we need it right now to monitor. But we'll come back to that for sure, and we've taken note of your remark. Any other questions here? Seems not immediately. Anyone else who would like to come back maybe to our first presentation on the IIM methodology, or are we fine there? So Nicola, if I'm right, there are no new hands up, right?
That's correct.
Okay. Well, I mean, let's try to conclude here then at this stage. So for both projects, it's true that work will continue. On the first one, your input during the current public consultation, as said before, preferably by the 6th of February, and that's really a crucial deadline here for us to be able to continue the work in a timely way. Is welcome, your input in that respect. And on the liquidity metrics, of course, we will come back to you. I will make sure, and I hope this was also illustrated to the different usages, that we will give you also feedback on your personal results and on the aggregate results of the different liquidity metrics. And this way, we also hope to give you some additional insight into how liquidity in general is evolving in the global insurance sector. So I can also tell you that this session was recorded, and Nicola, you can correct me if I'm wrong, but it will be made available, I guess, through the website of IIS, right?
Yeah, it will be published together with the slides on the IIS financial stability page.
Okay, thank you. So if any questions or comments pop up after the session today, feel free to reach out to us. And in particular, for the first topic of today, do not forget to make sure you send us your comments in scope of the public consultation. So unless there are any last-minute questions, seems not immediately. I think we can finalize here for today. So we'll gain a little bit of time, and I'll be happy to meet you all again during one or the other public consultation or future IIS event. Thank you for attending today, and we'll see each other again in the future. Bye.
Bye, everyone.
Thank you. Bye.
Thank you. Bye-bye.